Back, the market's down about 64, 65 odd points or so. We are now joined by the management of Allcargo Logistics. So the management is joining us from the sidelines of the Prabhudas Liladhar Rising Star 2017 Investor Conference. With us right now is Mr. Prakash Tulsiani, Chief Operating Officer of the company at Allcargo. The sector is right. The stock, though, over the last 3 years or so hasn't really done very much. It's basically had big swings, but I mean, if you bought the stock 3 years back, you're right there still. So thank you for joining us. Good to have you here. Could you talk to us a little bit about the volume growth that you've seen at your container freight stations for the 9-month ended financial year 17? This year, that is, December ended volume growth. And how has the March ended quarter been, and how is the year ahead looking?
I think we were in the range of 5 to 7% as a growth. And going forward also, I expect that this trend should be continuing.
So under 10%, you're saying 7%. I mean, so double-digit volume growth, quite far away, you'd say?
Well, it is market-driven, as I said. The market, if you see, the growth in the EXIM volumes has been 1 or 2%. And we have been growing higher than the market. So as we go forward also, we expect to grow higher than the market.
Is there room for margin improvements in the CFS business?
As we go along, yes, there is a chance of product mix, and that product mix could help us improving our margins. So that's a continuous process, as I say.
Okay, so, you know, your margins in that particular segment, the CFS business, fell by around 140 basis points. Could you explain why that happened, and when can we see that improvement take place?
The numbers which you have just mentioned about includes 1 or 2 facilities of ours which were under, as I say, construction, or, you know, they were in the initial phases. For example, we have taken a facility in Mundra, and that new facility will take time till we ramp up the volumes. Likewise, in Kolkata, we are under construction right now, and there are rental payments to be made for the lease of the land. So that's the reason that you see our EBITDA, because EBITDA numbers are a bit lower compared to, as you are just talking about, compared to the previous in terms of margin, previous years. And that is because, as per the new rules of accounting, we have to take all this cost as straight to the P&L. Earlier, we could have capitalized it, but now it straight away hits the P&L. And that's the reason the margins look different. But on the other hand, if you see our ongoing, CFSs, which have been in business and which are in operations, commercial operations, their margins have done better.
In the transport operator segment, there was weakness in revenues. Could you talk about that?
I must admit and say that that is the top line is determined by what the freight rates are, because the freight rates are typically a pass-through for us. And if the freight rates fall, our top line also falls. What is important to see is the margins. And our margins have consistently been tracking very well, in fact, going up quarter on quarter. And we have done well. There we maintain our leadership position, and we will continue to grow our market share.
How serious are you about the projects and equipment business? Revenues fell 18.5% for the 9-month period. It doesn't contribute too much. Can you talk to us about how you see that? I mean, any improvement there in that segment?
This is a business where we are asset heavy. And if we look at the major portion of the PES, the project equipment and shipping division, equipment division is the majority of the total contribution in the top line as well as in the EBITDA. And equipment division has been doing very well. It has been having asset utilization of over 90%. They have been delivering good cash flows. And this is a stable business as and when the economy is actually improving. So we have seen traction. We have seen that improvement in our utilization from somewhere around 77% or 80% upwards of 90 today.
Okay, so sir, just leave us with one particular answer. 5,000 crore revenue, 300 crore profits. When do you think that's achievable?
It definitely depends on how the trade does. If the trade is doing well, and if the projects are also coming into India and the GDP improves, we will certainly cross this number very, very shortly. So I'm very hopeful, I'm very optimistic with the developments which have taken place in India, the trade developments, also the GDP growth, and the investment cycle which has improved in India. I think that will take us past this number soon.